Welcome to 7 Investing Now, a show that teaches you how to take a long-term view on investing by better understanding what's happening in the market now.
Good afternoon, good morning, good evening, depending on where you are watching this around the world. I will say good afternoon, 7 Investors, just to make it easy. And welcome to the Monday edition of 7 Investing Now. My name, of course, is Daniel Brooks Klein. I am the host of the program. I'm being joined today by Steve Symington, and we're going to talk Virgin Galactic raising its prices from incredibly high to incredibly higher, but we'll get there in a second. And we're going to talk what to watch going forward. We'd like your involvement, your questions about the space race, your questions about Virgin Galactic, your question about what Richard Branson's like. I've actually got to be near him at a trade show. It's a very compelling guy. Before we do that, Steve, happy anniversary. How many years has it been?
Oh, hey, thanks. I forgot you have me on Facebook, but yeah, it's 15 years today with my wife and I. I love you, honey, if you're watching. But yes, that's a long time. I guess when you think about it, it's a decade and a half now. 21
for us, so I am winning, and I don't think you can catch up. There is no 3-point line here. Good morning, Alicinko, or I am probably not pronouncing that correctly, but as you can see, if you are watching the show wherever on any platform, if you make a comment, in theory, we see it. So feel free to put through some general market or investing questions. We won't answer those till the middle or the end of the program. But basically, say hello, do what you like. It is a free form program a little bit today. So here's what's happened. Virgin Galactic, a company we have talked about a lot, has reopened ticket sales for its space flights at a starting price of $450,000 a seat. This comes after the company completed a test flight. Steve, this is $450,000. I know they say it's like a 4-day space camp experience, but it's an 18-minute suborbital flight. This is a lot of money. Yeah, I'll let you jump in here.
Yeah. So for perspective, they already have about 600 people who previously reserved their spots, paying an average about $250,000. They closed their reservations several years ago. They have not reopened them until just last week. We saw shares kind of rally on the heels of that. And yes, it comes not just on a single test flight that included Richard Branson, most recently in July, but several other test flights before that. And they received their FCC approval or FAA approval to begin flying commercial passengers whenever they so choose, which we can get to that in a minute, will happen about Q3 next year. So that's about when they're targeting it. And there's a few things behind that. But yes, $450,000 a seat. I think we will be surprised at how many people will jump on that chance. So this isn't something they're targeting, just your everyday consumer. These are high net worth individuals who have the money to burn.
Steve, just a quick aside here. The original price was $250,000. Does this create a resale market? Because if I had a $250,000 seat, it's now worth $450,000. Now I get if I can afford to spend $250,000, an extra $150,000 or $200,000 if I could sell it for list value might not matter to me, but it is still a pretty big number.
Yeah, I don't know how that works exactly. I know there's been reports of some kind of notable celebrities, Ashton Kutcher for one, who sold their tickets back to Virgin Galactic years ago because his wife said, "Hey, we've got a young family." She was nervous about it. They hadn't moved quite as far along in their test program, so who knows how that plays? But if maybe you could say you want to be one of the first 600 to go up. I don't know if we have a resale market there, but.
So you're actually confident that there's going to be significant demand at these prices?
Yeah. So I think, when people ask what kind of demand are we going to have, I think the only accurate answer is stronger than you think. Right. And, previously they told investors actually, they've shifted some things around on the heels of reopening this. They changed several things. So, they previously told investors that they were going to reopen ticket sales after the next test flight, which was supposed to be, kind of any week now, right? And they decided after the Richard Branson flight, because they had seen such massive consumer interest voiced on their website for these flights, to reopen them effective immediately. And the next flight will be in late September. It's a scientific research and astronaut training flight with the Italian Air Force. That's at about $600,000 a seat. So that's another separate market for them. but they reopened them earlier than expected due to the demand. And there's several analysts who've already stepped out and kind of forecast pretty significant reservations. I think Morgan Stanley actually said they expect they should get a little over 1,100 new reservations out of this. And they also have a group of people, 8,000 people have paid $1,000 refundable deposits to secure their places in line after the first 600. So those people get the first chance, and then they'll open it up to another wait list afterwards. So I think that'll be an interesting catalyst for the stock over the next couple of months, is if they decide to step out and say, look at all this demand. Because if they do fulfill Morgan Stanley's forecast of securing an additional 1,100 reservations at $450,000 a pop, that's about 500 million in reserved seats that they'd be able to collect. And they said there is a slight premium, even more, to reserve full flights, because they'll have single seat options. They have a 2-seat option for couples and friends and family. And then if you want to book a whole flight, you can do that, but it'll cost you a little bit more. But I think we'll be surprised. Most people will be surprised at the demand that we see.
So, Steve, I think it's important to point out that you and I are both investors here. I think you believe in this a little more than I do, but I see the long range potential, especially on the travel end. But let's look at the numbers a little bit, because I'm not a giant numbers guy, as you know, but as an investor, it does at some point come down to numbers. What does it cost to operate a flight? So it's about 8 seats on a flight. Is that accurate?
No, I mean, the last one they did was 4. I think once they really start ramping commercial service, it'll probably be closer to 6 people per flight. That doesn't include the pilots. So yes, 6 paying 2 pilots. But Virgin Galactic doesn't break it down in granular detail. Like, this is exactly how much it costs for us to fly right now, because they're looking at scale. So when they went public, just a couple of years ago, they suggested that once they're at scale, or at least starting to, and this is assuming maybe flying 1,500 passengers a year, which won't happen for a few years yet, they were suggesting before that they'd be able to generate EBITDA margins of about 46%, so pretty healthy. But that model was also assuming ticket sales around 350,000 a piece, and that would have equated to about 600 million in revenue each year. So 46% EBITDA margins, pretty healthy already there. But more recently, I think it was last November, management had suggested that they want to be able to fly out from multiple spaceports with a high single to low double-digit numbers of spacecraft at each spaceport, and they expect each one to eventually generate if we can assume economies of scale and operating leverage continue, I think we see even healthier margins from this kind of near-term aspect of their business.
So you're looking at a very profitable but limited company. So they can open up a few more spaceports. But Steve, how long is this part of the business viable? At some point, you run out of idle multimillionaires, because the amount of money you have to spend $450,000 on an 18-minute space flight, you have to be worth, I'm going to say, north of $20 million, or you're really making a foolish purchase. Even then, it's kind of a foolish purchase. How long can this part of the business keep growing?
I think, again, the answer is longer than you think. I think this goes for several years. I think this can carry the company for a decade or more. But then they'll start branching out into other areas as well. But I honestly think this is a part of the business that can provide much needed cash flow and profitability to help them scale into other revenue streams going forward. But I think several years is the answer, and I think we're also, a lot of people underestimate the number of people who have the money to do this and to do it on a repeat basis. That was something that Virgin Galactic talked about in their conference call last week. The Q2 earnings conference call was they're building this up in such a way that it's not only sort of this life changing, transformative event for people, but yes, it'll be a multi-day event. The flight itself takes about an hour and a half. The actual space flight part is only a few minutes in microgravity, but suborbital, again, you go up, you come right back down. But we also look at what these people are spending on other things, like private jets from New York to London, or a week-long island rental for a vacation or something, and then eventually they'll bring the cost down. Because it's not going to be $450,000 a seat forever. They've had slides where they say, okay, we've got about 50,000 people or 100,000 people who have the net worth to be able to afford this without even blinking. Lower it to 150,000 a ticket. The total addressable market expands pretty significantly. You lower it to 50,000 a ticket, and you've got a couple million people around the world who could pay that, and a pretty significant subset who will pay that. And I think again, the demand is going to be surprising.
A family of 4 at the newly announced Disney World Star Wars Hotel, which is a 2-day all-inclusive immersive experience, is under $10,000. That number seems astronomical, but I'm pretty sure I'd rather do that 45 times than do this once. Like, and I know I'm being a little bit silly, but it is a lot of money. We're going to talk about areas where I think the real future for this company is, but I want to take the comment from ABC Capital, because we are starting to see some comments come in. And Alicinko, we will take your comment later in the show.
That's Todd there. Hey, Todd.
It's actually our old friend Todd Campbell. Forgot about that. Forget sales, taking folks for golf and steak. Let's go for a space ride. I actually think that's an interesting thing. So that's a world my brother's in, where back when he worked at AEG, he took a private jet full of big ticket customers from LA to New York for the Stanley Cup final when the Los Angeles Kings were playing the Rangers. I actually think there is some market there. So that is kind of a smart point by our old friend there. But Steve, when will the company, and that's Virgin Galactic, we are talking Virgin Galactic. I'm Dan Klein. He's Steve Symington. You're watching 7 Investing Now. When will the company move into other revenue areas, and what do those areas look like?
I think it's going to take several years before we get there, right? And several years of scaling, building out new spacecraft, and they're only just finishing up the design phases of their Delta generation spacecraft, which will reduce turnaround to a weekly, or an every couple days flight is what they're looking at. But once we do that, and again, several years from now, I think we start to talk about hypersonic long haul travel. So point to point travel that can be not only things like cargo, but flying people extraordinary distances in just a couple of hours. And we already see they've already branched out into scientific experiment and professional astronaut training revenue. That's something I think is a nice supplementary source of revenue. That's going to be, again, their next flight in late September with the Italian Air Force. That's $600,000 a seat right now. But on their vision page, if you go to virgingalactic.com, I think it's like /vision or something of the sort, they explicitly mentioned bringing down costs to expand their total addressable market. And then over the longer term, even being able to transport customers to Earth orbiting hotels or scientific research stations. So they have expressed an interest in long-term orbital travel, but we are nowhere near that yet. But it's really interesting because you look and you say the sky's the limit, and sounds cheesy, but it really no longer is. And they have massive aspirations. And I think we're going to see a pretty significant sized business in the near term before they even get there.
That's actually what I'm most excited about, because do I think the market for 18-minute space flights, no matter how much space camp you go to beforehand, how much astronaut ice cream they give you for free, that's limited. It's a vanity play. No one's doing this twice. Like that is absolute nonsense to think you're going to, I don't care how rich you are.
I disagree. I do, though. I think we will. And actually, we can talk about, competition in that sense, but I think people will do it not only more than once on Virgin Galactic once they reach scale, but also doing it on multiple flight experiences, right?
That I agree with. And let's use the comment from Aliskino. I hope I'm pronouncing that correctly. Sam, if you want to bring that up. What about other players entering the space travel business over the next few years? Steve, I specifically brought up Blue Origin and SpaceX. It's important to know that while Blue Origin is going to be in this space, that's the Jeff Bezos company, their goal is actually colonizing the galaxy. Like they're more of an altruistic company, whereas SpaceX is delivering internet, and they are more of an eventual business competitor here. So why don't you talk a little bit about competition?
So, and I think we'll talk like that talks about like Starlink, right, where they have their fleets of satellites and stuff. But SpaceX, is already ushering people to the International Space Station. I think they have like orbital things that you can go on. But I mean, again, that's like a $55 million ticket is basically what you're paying for something like that. Very rare, extremely exclusive in that sense. Blue Origin is kind of similar. in that their aspirations are more orbital right now. They do have that rocket that Bezos and 4 other people went up on, including Wally Funk, who incidentally said she also has a ticket for a Virgin Galactic flight already. She's one of those first 600 people. She was the oldest person to fly to space, became the oldest person to fly to space with Bezos. I think one important point is that we shouldn't think of these companies as, at least in these stages, competitors. There's too much lip service being paid to who makes it first and who's a competitor where. I don't think they're stealing each other's business. I think if something good happens to one of them, it will reflect well on all of them. And I think it's sheer validation at this stage of the broader industry opportunities. So I don't think of them as only this company wins. And there will be more competitors in the suborbital space. And definitely the orbital space going forward. But I do think, to that end, there is some first mover advantage because you have companies that are, they're working to get FAA approval to do these things, especially if you're a company like Virgin Galactic. Not so much if you're a rocket ship that's automated like Blue Origin. They didn't require that. But yeah, I think, if something bad happens, conversely, it also reflects badly on the broader industry because it could spur hesitation among the public who is really the target consumer over the long term.
Steve, let me ask a quick follow-up, and then we're going to get to some of your questions and comments. How many successful flights do they need to be till we can deal with an unsuccessful one? Because in the airline industry, as awful as it is, we have plane crashes. They are very, very rare. And I don't want to say nobody worries about it because obviously lots of people are nervous about flying. But if we've had 1,000 space flights, is it 100? What's the number where a crash does not set the industry back years?
Thousands. I think it's got to be something where these flights are so commonplace that it's just a bizarre situation that caused a flight to fail. Thousands upon thousands, I think, before we reach that. And I'm reminded of a meeting that I had with the co-founder of GM Cruise several years ago, and he was talking about kind of their impending plans to launch a robo-taxi fleet at GM Cruise, which I can't remember. They've since changed their name, but he told me that it's not enough that we're twice or 3 times or even 4 times as safe as a human driver. We need to be 200 times safer than a human driver. And that's just, a situation where, you might have an autonomous vehicle cause an accident and, very rarely kill somebody. But obviously a crash or catastrophic event for something in the space tourism industry would be much harder to bounce back from. But even then, you saw that Virgin Galactic back in 2014 had a flight that actually crashed and killed one of their pilots. The other one miraculously survived. And that was human error that caused that flight, unfortunately. And they fixed those issues. But even then, you look at the 600 people or so who hung on to their reservations through that process. So kind of extraordinary in that sense. But yeah, it's going to be much more sensitive to adverse events.
We're going to start with the comment, and Steve, you can read this one, from our very own JT Boulevard. That is, of course, our marketing person, JT Street, under a luchador mask. Steve, take it away.
He says, I agree with you, Dan, about SPCE long-term. That's Virgin Galactic's ticker. Virgin Atlantic doubled down on cargo during the pandemic, and I can see the growth of suborbital cargo flights as a long-term goal. Imagine flying a load of cargo from New Mexico to China in a few hours. Definitely a possibility, especially once they scale these planes. And that's something that management has said. At this point, we've realized we need a lot of planes and multiple spaceports. And again, those are each going to be kind of catalysts for the company. They say, here's a new plane, here's a new style of plane that is much more modular and reduces turnaround times. But new spaceport news and additional planes is the goal. And once they, kind of get through their growing, massive and growing backlog of people who've made reservations, then most certainly, cargo trips could be really interesting and larger planes that are built to fly cargo and not necessarily people.
Sam Bailey, we will take the comment from Mike Fee next. Mike, thank you for being a regular of the program. People that put deposits down with Virgin Galactic 10 plus years ago, the return on that money could have been doubled by now if they invested it in an index fund. Yeah, and it would be even higher if they invested it with 7 investing picks. That being said, I am pretty sure the people we're talking about, $1,000 would be the equivalent if Steve and I were out and he forgot his wallet and he said, "Hey, can you spot me 100?" Like it's just not. It's not a relevant amount of money for these people. But Steve, still a fun way to think about money here.
It is, and it's also something that kind of sheds light on the new price. $450,000 might seem high, but adjust that for inflation and the possible returns they could have earned on that money. It's really not, all that out of the ordinary. And again, looking at yet sort of unconfirmed reports talking about Blue Origin's flight, they said theirs is well north of 500,000 or 500,000 per seat, and Blue Origin said they've already collected it over 100 million in reservations. So again, a lot of people out there willing to pay this in these early stages, and there will only be more as the prices come down and they scale.
Yeah, let's be very clear. The audience here isn't like me jumping on Priceline, trying to save $30 on a hotel room, or being excited to get comped in Vegas. This is a well-heeled audience that is spending dramatic amounts of money on travel and leisure and vacation and things. These are people who are buying cars that are six-figure cars. So again, it's not a world most of us travel in. It's frankly a world that many of us probably wouldn't spend this money even if we had it, but there's clearly an audience for this. I want to close out with the last comment from Daniel Delgado. Daniel, we'll try to take your other comment towards the end of the programming if we have some time. Isn't the future to accomplish low orbit flights from Houston to London? I think this is the most exciting piece of the company, this ability to get super fast global travel. I would happily fly from New York or Houston to London in like an hour? Like that sounds great.
Yeah, and that's pretty quick. And a lot of these people are already chartering private jets, and that was part of what Virgin Galactic included in their initial investor presentations prior to their SPAC merger going public. And they highlighted the fact that people were already paying $150,000 for a private jet from New York to London. And in that sense, a $450,000 ticket where you actually get to experience microgravity it would be kind of incredible. And you extend that, and you extend that to be able to go from spaceport to spaceport, could be really, really interesting. And I think it's going to be a lot of fun to watch this story unfold.
It also opens up the possibility of American sports franchises in London, which is something we've talked about a lot with the NFL, but the logistics of it has always been the problem. If in theory you can have a quick flight from London to some New York base like New York, that is actually a game changer in terms of, and obviously you have the facilities. This type of thing could make the world smaller. And when I say make the world smaller, I mean that in a really good way. Do I think that means, Steve and I are going to meet for lunch in Paris? No, it's going to be more expensive than that. But is my brother, who is a big time sports executive, going to fly to New York for a business meeting much more readily, because it's even at the cost, it's worth it with the dollars involved. We're going to move on to the home stretch here, the second half of the show. And that we're going to talk about what's the most important investing or business lesson you've learned from your parents or other family members. Before we do that, let's remind everybody, we are both lead advisors for 7 Investing. What do we do at 7 Investing? Our core product is 7 stock picks each month. We each make our highest conviction stock picks. So we look at the entire universe of stocks and we say, wow, this is the stock. If I could only buy one, this is what it is and why. We then do a write-up on that stock. My write-up topped 3,000 words this month. It had like 18 different graphics in it. And then we record a video. And Steve, I was shocked to learn my video was 43 minutes long. So if you're looking for a deep dive on each of these stocks, you're going to have that as well. So as a member, you can look as little or as much as you want. You can say, you know what? I've done my research on this stock. I just want to hear Dan's thoughts about management. I want to hear Steve's thoughts about valuations on his pick. Or you can read the entire thing. We also do members-only calls. We respond to member questions. It is a very intimate service. Obviously, we can't give you personal investing advice, but we can give you all sorts of ideas and ways to invest and have fun doing it. Be part of a community with us doing it. You get to experience a little bit of that on 7 Investing now, but when you're a member, you sort of get to become part of the family. How do you become a member? It is very simple. You have to collect box tops from cereal box. No, you go to 7investing.com/subscribe and you can choose 2 options. You can either pick the $49 a month option, great option, incredible value, or the deal of the century. That is $399 a year for annual membership. You save about 2.5 months by doing it that way. We can't say enough good things about the service. Obviously, we are biased, but our members tell us all the time. It is incredible value. You get access to an incredibly diverse team of investors. Look, I cover retail. I cover some technology, but I cover some entertainment. That is very different than what, say, Max Chatsko covers in the biotech space, what Steve covers, and what Anirban covers in the emerging technology, Matt in payment, Dana in healthcare. None of us are full specialists. We all branch into other things. That being said, it is an exciting group of picks every month. Steve, 10 seconds. Anything you want to weigh in with here?
Scott Eigenberg says, it's true they answer personal emails. I send Steve annoying messages all the time. I wouldn't say they're annoying, Scott. But yeah, he actually sent me a message, I think middle of last week, and we got to chat back and forth about one of our recommendations. If you have questions, again, info@7investing.com. I am almost always the person who answers it, but several of us have access, and we keep close eye on that. We answer them all personally.
We talk about it a lot, but it's because we believe in what we're doing and we're excited about it. But let's move into the second half of the show. Let me remind you again. It's what's the most important investing or business lesson you've learned from your parents or other family members? I'm going to go first here, and then Steve, and then we're going to move to a whole bunch that you shared on Twitter. And I would say it's one, you'll hear me talk about this a lot on 7 Investing now. It's serve the customer. Where did I learn that? Well, my grandfather owned a multi-million, a tens of millions of dollars business. And as he walked in the morning, if there was a customer at the back of the line waiting for help, my grandfather might spend his first half hour of the day walking him to the warehouse, picking out what he needs, filling his order. At no point would he say, hey, I'm the CEO of the company. So I learned very early on that you have to really make sure your customer experience is great. And when I worked in retail, that really translated, to, okay, who is my customer? How do I make sure the new person walking in doesn't feel intimidated? And really thinking about it from every type of customer. I think it's something that's greatly not done. And yeah, I'm looking at you, food delivery services. A lot of companies don't say, wow, how do I make every part of this good? Steve, what's the most important investing or business lesson you've learned from your parents or other family?
I mean, I'd stick to maybe business on the business owner side of things, because my parents didn't invest a lot. They didn't take it that seriously until I actually got more involved with it. But I think just consistency and hard work and just sticking with it. One of my dad used to always say, never quit, right? And just steadily adding to a portfolio, building on it, and sticking with the companies you've actually done your research on, and keeping just watching them as their thesis plays out and making sure it's in line with the reasons you initially bought the company, and thinking long term. And while my parents didn't invest, I know my grandfather did, and my folks didn't have a lot to work with when I was younger. But they talked about how my grandfather used to work for an oil company and amassed a pretty hefty nest egg, just by putting a little bit of money away throughout his career. And it's kind of interesting to watch. So just the importance of consistency and just continuing to work hard and stick with it. And it's that's the best way to kind of amass wealth over the long term, is just consistency. Avoiding the get rich quick schemes that a lot of people find when they're looking at things like penny stocks or day trading and things that are extraordinarily difficult to create consistent results for most investors.
Yeah, as someone who has spent the past 2 years working out with a trainer, obviously with some disruptions to our ability to do that efficiently with the pandemic, losing weight and getting in shape slowly actually does work. Doing it quickly might work. It's not really that good for you, and it's going to have some negative consequences. It is the same with getting rich quick. The worst thing that can happen is dumb luck on a penny stock, making you a bunch of money. We would love you to weigh in with your investing lessons that you've learned from family, investing lessons you want to share in the comments. Dan Soto, welcome back. Thank you for watching. We appreciate the hello. Sam, let's take these in orders. We're going to spend about 10, 15 minutes going through as many of these as we can. So we will try to be brief, but I can't see the names. I think Roy is the first one. Yep. My family didn't understand investing, but they did a great job at teaching me the power of an emergency fund and how to stretch a dollar. Yeah, I'm a huge believer in an emergency fund. I am always afraid. The second you don't have any money, It's when your roof collapses. I actually feel like having an emergency fund is karmic balance against something bad happens. Steve, your thoughts here?
Yeah, and something we always say is we don't like to invest money that we're going to need in the very near term. And when you look at the stock market, we try and stick to money that you're not going to need for the next few years, and invest that way, and you'll sleep a lot better at night. When things go bad, then you'll at least have some money to fall back on in the near term. But yeah, definitely, and also Roy's Twitter handle, invest for number 4 decades, checks out. That's a good one.
We appreciate that. Sam, hit us with the next one. My grandfather taught me to pay with cash. If you don't have enough cash, you don't have enough to buy it. Credit cards are not owned. It served me well in life, especially in my 20s. Debt is an albatross many put in their lives, and you sometimes can't escape. Let me make one caveat here. It is actually important to have credit cards from a building credit point. If you ever expect to get a mortgage, just really one area, mortgage and a car, the areas where it's acceptable to borrow, maybe school in some limited cases. And you do need, so here's what I do, and Steve, you could weigh in. I have a number of credit cards, and I use those credit cards all month. And I actually pay off my credit card bills on, if not a daily, certainly a weekly basis. I also put a lot of things on an American Express that just automatically settles. So I'm spending cash I have. I'm just also getting credit card rewards and building up a credit score, which I think are valuable things for people to do. Even things like your insurance rates or your ability to get life insurance ties into your credit rating. Your thoughts on this one, Steve?
Yeah, I mean, it's kind of hard, in today's increasingly cashless society to pay with cash consistently all the time. I haven't had cash in my wallet for a long time. But yeah, I think that also speaks to budgeting and not spending money that you don't have. And that's a hard thing, in today's society, especially when you're looking and keeping up with the Joneses and seeing everybody else do things that you might not be able to afford. But yeah, that's an albatross.
Yeah, the spirit of that is pay like cash. It doesn't have to actually mean pay with cash. Sam, let's keep moving through these. Money you don't see, you don't miss. Other words, auto-allocate each paycheck to 401k, IRA, and brokerage. Yes, absolutely. My son just started working, and 25% of what he makes each month, each pay period, is being, quote, auto-allocated because he makes a different amount. I'm doing it because he's under 18, so I'm on his account. I'm moving it to a brokerage account, and he's going to invest that, and I'm going to match it at maybe a 10% level so he can experience having those really strong returns, even if the stocks he buys don't turn out to have strong returns, because I want him to sort of learn the market and not have me make every pick. Steve, how are you balancing that?
That's such an underestimated thing is money you don't see, you don't miss, because I can speak from experience. Even if you have a budget set out, if there's money in our checking account, we tend to spend it. So it's one of those things where you put it aside and you almost kind of forget that you have it if you don't have direct access to it. So 401ks, IRAs, brokerage accounts, savings accounts, even moving them aside, making it less accessible for everyday spending is a fantastic way to save. And again, it is funny how you think you don't really miss that money when it's not there. You put it aside, you save it, and it builds quickly.
Yeah, we obviously, my wife has the equivalent of a 401k. She works in a nonprofit, so it's not exactly that. That's automatic. We automatically transfer every 2 weeks into our brokerage account. I will say I had an unexpected $2,100 windfall a couple of weeks ago. We got a rebate from some escrows on our closed off mortgage. And oh boy, it was hard to put that money into the market. I really, really wanted to buy something dumb. So I allocated a percentage of that money to buy something dumb, and most of it got invested, because the reality is it wasn't found money. It wasn't money I won in a slot machine. It was my money coming back to me from an escrow. Let us keep moving forward. We appreciate so many of you asking great questions. Don't spend that you end up paying interest, but save enough to earn interest. You don't earn interest anymore. And that's kind of why I wanted to talk about this one. Absolutely not having credit card debt. Now, here's when you could have credit card debt. If you are on the way up and your refrigerator breaks, well, you have no option but buying a refrigerator. And if you don't have the cash for it, you have to put it on a credit card. Try to get a 0% deal if you can. If not, pay it off as fast as you can. That's why you have credit cards, as you're building your emergency fund, as you're working your way up. But yeah, we are believers in that 6 month, 9 month, whatever you consider a safe emergency fund. That money is not going to make you a lot of money, because right now interest rates are essentially zero. Steve, your thoughts here?
I also think this is why, to that end, if you're spending money that you don't necessarily have, I think that's why a lot of younger people are embracing pay-as-you-go things. We saw Square acquire Afterpay for $29 billion last week, right? And then you've got other companies like Affirm. They're big for a reason. So I think that's kind of interesting. But yeah, interesting that it is true that it's hard to earn interest anymore. With interest rates at near record lows and yields on savings accounts and fixed income investments are so minuscule that it's hard to justify putting money to work. And that's part of the reason that equity securities have been more attractive. So, personally, I would prefer, if I'm looking to put some low risk money, relatively low risk in money to work in investments, look at some of your more stable dividend paying stocks that have pretty healthy yields and find yourself an attractive balance between the dividends that you'll be collecting and potential share price appreciation for those stocks. So that's how I like it at this point.
It is important to go back to what Steve said, though. Don't park your money in, say, Costco shares or Microsoft shares that you're going to need in the next couple of years, because Microsoft has dipped by 50% multiple times over the past 20 years. So just remember that even though it's not making money, cash is still safe. Obviously, don't keep it under your mattress. Keep it in an FDIC-insured bank account. Let's keep moving and take the next one, because I want to get to as many of these as possible, because so many of you weighed in. Philip Gates said, "My dad was frugal, not cheap, but frugal. He taught me just because I could buy something didn't mean I should buy something." That is a lesson I wish I learned in my 20s. It's something I fight with a lot now, because if something's, say, less than $1,000, I can buy it if I want to. And it's very difficult for me not to, but I think I've mostly controlled that. Your thoughts on this one?
Yeah, that's such an understated thing in today's world. Again, kind of keeping up with the Joneses and constantly getting bombarded by advertising and wants versus need, prioritizing them. But yeah, just because you should buy something, could buy something, doesn't mean you should. I always think, what's the opportunity cost here? If I could buy something, for a few $100s, like, would I rather put that few $100s to work in a brokerage account? Do I really need this? I could build on it, and I could turn that few hundred, over time into the thousands. So those are the kinds of things that I'm kind of thinking about when I purchase something. What's the opportunity cost of spending that money on something I don't necessarily need versus investing it?
We're going to close out this segment with Joyce Hines' comment, if you want to bring that one up, Sam. "My father taught me how important it is to save money and invest." So all of us who are watching the show, who are part of this show, I actually think it's really important to remember our kids, our future kids, our nieces and nephews, whoever the young people in our world. Because I know that growing up, my grandfather taught me how to bet at the track. Like, I am really good at a horse track or a dog track because my grandfather taught me that. He didn't teach me anything about the stock market. It's not because he wouldn't. It's just because that's not how we thought. So I think it's really important now that the stock market, one, has been really democratized by zero cost, zero commission trades, the ability for anybody with almost any amount of money to buy fractional shares of really good companies, at least here in the US. That's not the case the rest of the world. I'm very open with my 17-year-old about investing. Steve, I know you're the same with your kids. And I think teaching those lessons is very, very important.
Mm-hmm. Yeah, absolutely. And I like the simplicity of ending on this one. My father taught me how important it is to save money and invest. Pretty straightforward. And I can only hope we instill those same lessons on our kids.
Mike Fee says he highly recommends the book, The Millionaire Next Door. I am not sure of that one. And I don't have a millionaire who lives next door to me, as far as I know. But Steve, is that one you've read?
It's a decent read. Millionaire Next Door is kind of the power of just steady saving and sort of unassuming people who are wealthy that you might not guess it, right? And it's people, just the power of consistency and saving and budgeting and not spending money that you don't have. So good movie, or a good book that speaks to a lot of what we've been saying today.
I, of course, plan to be ostentatiously wealthy, wearing a monocle, having a butler, all of the things that Mr. Peanut does to show the world. Well, no, of course not. One of the best things about not doing those things, not wasting money, is you can be wealthy when you're not actually that wealthy. I am not overly wealthy, but I am sitting here in my very nice resort vacation home because we've been very careful and we've made very smart decisions. And that's something that I think anybody can do. I will not pretend I haven't also been lucky and born into a family that maybe had a little more than some others. So I think that that's worth noting. I've had some help along the way, even though I've certainly created a lot of my reality. We are running out of time. We appreciate so many of you watching the program, so many of you playing the home game and asking us questions, following us on Twitter. But I love this one I asked as our finisher here, Sam Bailey, if you would like to bring it up. Do you find that Netflix has content you're consistently excited about? 26.5% said yes, 73.5% said no. I think that's kind of a major red flag. Steve, I am pretty negative on Netflix compared to most people. I pay for it because my wife and son watch a lot of true crime stuff. I find it maddeningly frustrating that you open up Netflix and finding something you might want to watch is difficult. The recommendation engine is bad. The commitment to, hey, we're launching this series, I'm going to get a conclusion to it, even if that means we just wrap it up at the end of season 1, is terrible. And in the early days of Netflix, that wasn't true. Nothing got canceled. I think it's too much content, too much thrown at the wall. Every show that launches on Disney Plus is a hit on some level. Netflix is some weird algorithm that they will tell you it's a hit. I don't actually think this is the winner that everyone thinks it is. I hate to be negative because it's a great company and everyone has it and no one's going to cancel, but they spend way too much money on content. Steve.
Yeah, and I think part of the power of Netflix's model is they have the power to eventually change that. Where they could step out and say, you know what, maybe we're investing too much in this content that people don't want to watch. But I think there's enough there that's interesting that nobody wants to cancel. And I think that's kind of an important caveat to the relatively underwhelming feeling of logging into Netflix and not being able to find anything that you want to watch. But it's not bad enough where I'm going to go cancel it. I've got my kids who watch content on there, even if it's old content, and every once in a while an old movie will pop up and I'll be like, oh, cool. But yeah, I'm not as excited about Netflix as I was, but I'm not convinced that they will underperform going forward, or that they're let's throw a bunch of money and a bunch of resources at creating this content and see what sticks method is necessarily off base. But it might be frustrating, and I hope that they have maybe the vision to adjust that in a more Disney Plus-esque way going forward. And that could really turn some heads, I think, because they could let a lot more of the resources that they're throwing at original content generation kind of fall to the bottom line and actually create shareholder value in that way. So that could be more interesting as the company kind of slows its growth going forward.
If they literally cut the content creation in half, at least on a U.S. level. This is probably not true in most of the other markets where they're taking more selective swings. But if they cut it in half, it would surface better. I would know it existed. The other thing is, I've talked about this a lot, and people get mad at me, so please don't hit me up on Twitter. That is @worstideas7. Please do not message me to tell me how wrong I am about this. Releasing everything for binge watching is catering to a niche audience at the expense of public relations. When Disney releases new episodes of The Mandalorian or Falcon and the Winter Soldier, every single episode is an event that gets broken down on Entertainment Weekly, on theringer.com, on all these different major sites. People do podcasts about them. So they have a life cycle of a show that builds, where someone 3 or 4 episodes in sees something, goes, oh, I better catch up and watch that. Whereas if you don't see Stranger Things in its first 72 hours, you have no idea if you can talk about it with anyone. There's no hype about it. Netflix has shot itself in the foot for a model that, what percentage of people actually sit down and like, hey, Stranger Things is out, I'm going to watch it all in one weekend? That's a dumb way to watch a television show for the most part. I know people like it and get mad at me, but I liked the reason you spread out something over 10 weeks is it builds, it's fun. You can talk about it in between. I used to have a group that, talked about The Mandalorian, and we had rules about when you had to watch it by, so you can talk about it. I think Netflix, look, they're the market leader. It is probably still a good investment. I just don't think it's actually all that well run. And I know that's terrible to say, but there are better ways to do what they are doing. We thank you all for watching, for joining us here on the show. We'll be back on Wednesday. If you'd like to get in touch with us, that is info@7investing.com. That's usually Steve answering it. that has questions about our service, questions about your membership, questions about how you join, maybe questions about our new student membership, maybe questions about what Steve did this weekend or what he's doing for his anniversary. No, do not ask those things. You can follow Steve on social media. You will get some of that. If you would like to interact with us, we are a lot of fun on Twitter. We are at 7investing. And a lot of what we do is sharing the things that the 7 of us are individually talking about. And we have a lot of really interactive things on Twitter that we often make part of this program. The finisher is usually from this program. You saw that last segment we did is all your words on Twitter. This is the most interactive finance show on TV. CNBC doesn't care what you're talking about. Most of the other shows out there don't care what you think or what you want. We're doing the sports talk in the investing world with a long-term view. Steve, thank you for doing this. Enjoy your vacation next week. Not that any of our members will notice you're on vacation, because I'm sure you'll still be answering the email. Sam Bailey, welcome back. Thank you for jumping on so quickly. JT Street, thank you for filling in all week. And of course, all of you, thank you for watching. We will see you Wednesday.